NIO stocks have been performing spectacularly. Want to know more about it? Keep watching. Hey everyone, and welcome back to our channel. In this video, we'll be talking about NIO stock price prediction and everything you need to know about it. But before we start, do consider subscribing to our channel and turn on the notification bell to watch more of our exciting content. Alright, let's get started. NIO Inc. is a major new electric car manufacturer in China. The pure-play NEV player has made a remarkable recovery after nearly going bankrupt a few years ago. NIO's October deliveries were disappointing. Nonetheless, among its main pure-play counterparts, the company continues to lead total deliveries year-to-date. Although the competition is fierce, NIO continues to grow at a breakneck pace. Because of the industry's size and potential, Elon Musk famously declared that China would be Tesla's largest plant and market. We examine whether it's appropriate for investors to add NIO stock after its relatively poor performance so far in 2021. The shares of NIO had a bad year in 2021. Its rising momentum faded after the switch from growth to value stock in February 2021. Despite a solid start to the year, it's remained in a consolidation phase despite a stunning rebound in May. In comparison, its Chinese NEV contemporaries have had better results thus far. With a year-to-date return of -16.8%, NIO stock is now lagging its leading Chinese NEV peers as well as Tesla stock. Despite its unexpected difficulties, NIO can rely on its native market of China to help it develop. China has reclaimed the top spot in the worldwide EV market, which it had momentarily lost to Europe in 2022. According to Bloomberg NEF, electric vehicles will account for 25% of total car sales in China by 2025. Up from 6% in 2020. China's government estimates are slightly more conservative, with a 20% growth rate by 2025. However, China's EV sales surpassed expectations, with EV sales accounting for 17.5% of overall sales in September and 13% year-to-date. As a result, we believe that the huge sector tailwinds fueled by China's national strategy for EV adoption will continue to propel NIO forward. Even as it plots its European expansion, the business expects China to be its most important market. When we look at the world market, we can see that China is still the largest car market and the largest premium market, so China will continue to be our most significant market. However, I believe that, in the long run, markets outside of China should account for about half of total sales of our goods. As a result, we anticipate China to continue driving the company's development as it scales. NIO stated that it has a maximum yearly production capacity of 600,000 units. As a result, the company is well positioned to expand up manufacturing in the future. We believe NIO's market opportunity is still in its early innings based on its current year-to-date deliveries. China's leading NEV manufacturer is BYD Company Limited. Its year-to-date deliveries demonstrate the company's unchallenged dominance. In a recent essay, we also explored BYD's argument. Despite this, NIO continues to outperform its pure-play peers in terms of year-to-date deliveries. The competition, on the other hand, is fierce. Nonetheless, we believe that NIO and its counterparts will continue to profit from China's enormous tailwinds pushing EV adoption. The abnormally low delivery figures of 3,67,000 in October could be seen. The company stated that it would require considerable downtime in order to change its manufacturing processes to accommodate Et7. Notably, the corporation stated that regular manufacturing has been resumed since late October. We implemented upgrades and the restructuring of the manufacturing lines at the Hefei Jack NIO Advanced Manufacturing Center to prepare for additional capacity expansion and new product introductions, including Et7, Lee explained. In October, we delivered 3,667 automobiles as a result of the modifications and restructuring. Since late October, the factory has resumed normal output. As a result, we're unconcerned about October's issues. Q4 deliveries are expected to be between 23,500 and 25,500 according to the business. As a result, at the midpoint of NIO's guidance, Q4 deliveries are expected to be around 24,500. As a result, QoQ growth is expected to remain flat. Despite this, the business forecasts good deliveries in November and December after accounting for October's abnormally low numbers. The company anticipates delivery roughly 10,42,000 units per month in November and December on average. That will put it on par with September's 10,63,000 deliveries, which set a new high. As a result, concerns about October's weakness have been exaggerated. The number of units delivered by NIO in fiscal year 21 is estimated to be around 90.9 thousand. Considering NIO's yearly manufacturing capacity of 600,000 units, it's evident that the company plans to ramp up production quickly in the future. While reaching the 600,000 yearly run rate may take some time, NIO is planning to deliver 3 new products in 2022, including Et7 based on its NIO technology platform 2.0. As a result, the company is continuously renewing its slate and anticipates continued significant delivery growth in the coming year. Notably, the company anticipates successfully navigating the chip supply shortage. In the short term, it has also impacted NIO. NIO, on the other hand, exhibited its capabilities using in-house technology, and Lee explained how they were able to overcome those issues. I'd like to especially note that because many of the domain controllers in our vehicles were created in-house, Lee continued, so if specific chips and domain controllers are in short supply, our teams can immediately discover a substitute, perform rapid validation, and produce those cars and chips more quickly. As a result of those capabilities, we've already been able to remedy some chip shortages that have occurred in our vehicles. We can soon see that NIO's top line has grown rapidly. It has also managed to significantly increase its operational leverage as it scales. As previously said, we believe NIO is still in the early stages of its profitability expansion. NIO is predicted to continue to grow significantly despite having 600,000 yearly production capacity. Through fiscal year 23, the company is expected to grow its top line at a fantastic CAGR of 77.7%. Notably, EBIT consensus projections for fiscal year 22 suggest a lower EBIT loss margin of 2.1%, with a projected EBIT margin of 3.2%. NIO is expected to become profitable in fiscal year 23. As a result, NIO investors may anticipate the company to continue to gain traction in Europe and in its home market. Furthermore, we recommend that investors pay special attention to the firm's new product launches in 2022, as the company anticipates a strong delivery cadence in the future. Regardless, based on FQ421's forecast, November and December delivery figures should be strong. The EV/NTM revenue ratio of NIO stock is 7.9 times. It has dropped significantly from its January highs. It's also around 14% higher than the 3-year average. As a result, we feel that the current value of NIO stock is attractive. It's a far more powerful organization than it was 3 years ago. In addition, it has increased its operating leverage dramatically. We believe long-term investors would do well to sit on it, given the strong secular fundamentals that will sustain its rapid rise in the future. We believe NIO stock will be re-rated in fiscal year 22 if it can continue to improve its delivery cadence. As a result, investors should take advantage of its current weakness and add NIO stock to their portfolios. In 2022, NIO expects to release 3 new electric vehicles, including the ET7, the company's first electric sedan. The ES8, ES6, and EC6 are 3 luxury electric SUVs produced by the hot Chinese company. NIO is extending its operations outside of China while expanding its capacity in China. In Norway, it sells ES8. In 2022, it intends to market the forthcoming ET7 in Norway and Germany. BYD and XPeng, 2 Chinese competitors, are also present in Norway, with Li Auto seeking to expand into Europe. On the continent, Chinese electric vehicle manufacturers, especially Tesla, are posing a threat to Western automakers. According to the China Association of Automobile Manufacturers, EV sales in China are predicted to increase by more than 30% to 1.8 million units in 2021. According to IHS Markit, global EV sales are predicted to increase by 70% by 2021. Analysts believe that the worldwide semiconductor shortfall could anticipate an EV battery crisis. NIO, as well as Tesla, Volkswagen, General Motors, and Ford, were all affected by the chip dilemma. New and forthcoming electric vehicles are among NIO's growth drivers. Meanwhile, the company's revenue model relies heavily on battery services. NIO offers a unique battery subscription service. The car and the battery are, in essence, sold separately. Users can save money by purchasing NIO EVs without batteries and renting batteries for a monthly cost. They can also switch car batteries according to the requirements. NIO announced in July that it had doubled the number of battery swap stations and had completed 2.9 million swaps, up from 1 million in October. It has brought battery swaps to Norway, posing a new challenge to Tesla. With that, we're at the end of the video. If you found it interesting, make sure to hit the like button and subscribe to stay tuned for more exciting videos. Let us know your thoughts in the comment section below. See you again with another exciting video. Until then, bye!